Hey everyone, welcome in to another daily editorial here on the KE Report. We're focusing again on the precious metals and more of the technicals here as I am chatting with Jordan Roy-Byrne, founder and editor of the Daily Gold. Jordan, let's start off with gold. It's down about $38 on the futures market right now, $18.69 as we are recording it. The dollar is up. You know what? The fact of the matter is we are in this correction for gold that you and I have been talking about for a while. Even, I believe it was last time we chatted, you said that it would be better for the gold market to correct from where it was a week ago rather than pop higher, because then the following correction would be even deeper. What do you think about what we are seeing this week so far? 2 days of fairly large down moves.
Yeah, Corey, it's very healthy what's going on, although it's leaving some technical damage. So I don't want to be too optimistic with respect to the short term. I mean, definitely short-term risk is getting wrung out of the market, but my that's just my initial thought here is we are seeing some technical damage with this breakdown in the sector. So we are moving towards a buy opportunity, I would say, but I don't think this is going to be something where we make the low and then the market zooms back higher again. I mean, this is probably going to be something where we make a low over the next few weeks and we get a nice rebound from there, but we might, retest the low again or bounce around for a couple months after that. So that's kind of my big picture idea with where we are in precious metals. I mean, there's a little bit more short-term downside. We're probably going to see lower prices, but it's good to see that a lot of risk is coming out of the market.
So, Jordan, when you mentioned some technical damage being done, what time frame of chart are you looking at? Can you give us a little more insights on maybe a specific gold chart?
It's a good question. I mean, looking at the one thing that caught my eye is the monthly charts. The monthly chart of gold has put in an obvious top, and the monthly chart of silver, especially this month, is pretty ugly. I mean, we're speaking here on the 23rd, so we have another week to go, and we'll see where the month ends. But these candles that we're seeing in gold and silver, these are not the type of candles that are going to be exceeded over the next couple months. And probably the next. I mean, it's possible, but just looking out over the next 4, 5, 6 months, are these candles going to be exceeded? It's kind of an iffy proposition. So that's kind of I think that the damage that we're seeing on these monthly charts is significant. But I mean, if you look back in history, you look back to the 2000s bull market, this kind of decline has happened before. And then what happened after that? The market sold off, made a low, it rebounded, then it chopped around for a while. So that's what all these things are telling me, at least right now. That's my initial take, is we're probably going to make a low in price over the next couple weeks. That'll lead to a rebound from there. And then after that, we could chop around for a little while before the bull trend reasserts itself sometime next year.
Okay. Hey, same time frame as the conversation I just had with Doc as well, and Chris Temple, in terms of when gold could potentially test that 2090 level that it reached on the spot market just about a little over a month ago. What are some of your lower targets for gold then? Where do you think we could finally see the end to this selling and a bit of a consolidation move?
Well, looking at gold and just looking at the daily or weekly chart, there's strong support in the upper 1700s. Now, if we look at the monthly chart and we go back 10, 11 years or so, right around 1800, the high 1700s, there's also support there. There is some interesting history, which I'd like to discuss. And unfortunately, we don't have that many instances of this, but there's 2 or 3 historical comparisons here to where gold is right now. Now, the first one, which is not one of the 2 best, is the early 2009 analog, where, gold rallied for 4 months, then it corrected for about 5 months or so. It was a 15% correction. I don't know if it tested the 200-day. I think it may have tested the 150-day, or I've just found my notes. No, it tested. I think it tested the 200-day. So, and it had a 15% decline. But then after that, I mean, it made a really nice move higher. But the other two are a better comparison, I think, Corey, because those are the cases in which gold made a new all-time high after a real bear market. And so what was the first correction after that move to a new all-time high? Well, if you look at what happened in 1978 and 2010, 1978, it corrected 20%, bottomed at the 200-day moving average. 2010, it corrected 15%, bottomed at the 150-day moving average. So, those are pretty sizable corrections, 15% and 20%. I think a 15% correction in gold here and now brings it somewhere into the mid to upper 1700s. Now, we're breaking down now. We're in the high 1800s now. I think at least we're probably going to head down to 1825 or so. But I mean, here's the optimistic side of that history. After the correction, if you look at those two markets from the peak before the correction, one of them rallied, I think, 27% in only 9 months. One of them rallied 27% in 17 months. Now, if we take that, a 27% rally from the peak over the next 17 months, that puts gold pretty close to 2,600 at the beginning of 2022. So the near-term outlook is not great. We've broken down. We're headed to a low. We'll probably need a few months to chop around after that. However, if we're looking out 12 to 18 months in that time frame, we're going to see significantly higher metals prices. So that's really what people should be focused on. If you have a lot of cash or you've been waiting, you came into the market a little late, you still have too much cash. I mean, this is your time. Just be patient. Let things get a little bit cheaper. They're probably going to come down a little bit more. That's going to be your time to make some great buys at a discount. I mean, this is a much better buying opportunity than what we saw a month ago or 2 months ago.
All right. And you know what? That's something to look forward to for the metals investors. Hopefully you all have at least a little bit of cash on the sidelines. What about silver? Because silver has really gotten beaten up. Silver was holding up decently, I guess, and was actually playing a little bit of catch up to gold, but that again has reversed very quickly. And well, you and I were talking off mic. You look at that monthly red candle for silver, and that's pretty nasty.
Yeah, I mean, it's really nasty. And silver's trading at 23 now, and it has some support in the mid to high 22s. But, the $21 was such a key level, going back years and years, actually. So it looks to me like that's going to get tested. But I think silver will hold that support. And again, it's likely to bounce from there. It'll probably bounce up to 22 or 23 at least, maybe a little higher, and then it could chop around for a while and try and build another base. So, yeah, I mean, a lot of the damage has already been done as far as price, but there's some more damage to go in terms of time. But nevertheless, I would be around, $21 around that area. I mean, I would be a buyer, especially if you're a long-term holder. That's a good spot to add to your position.
Okay, but still some downside from there. Now, you mentioned that, again, it would be next year when we could see this nice reversal and moving higher and all that, and maybe testing out some of those recent highs. Are there any catalysts that you think could change that outlook? I know we have a lot of stuff on the horizon with the U.S. election and, quite frankly, all kinds of other stuff that could come out of left field, but anything that you're going to be watching closely?
Just the market, honestly. I know there's a lot of, as you said, there's a lot of news events that could be coming down the pike. But honestly, you got to watch the price action of the market. You got to assess sentiment. Look at the COTs, see where it's going. How's the market performing against gold? What are bonds doing? So I'm just going to be following the market. I'm not, and if you look at gold and silver, I mean they've made a peak that is going to last, I would say, at least 6 months. I don't have a crystal ball, so that, maybe it'll be 9 months or 7 months or whatever. But they've hit a peak. There's a lot of buying that came in, and also in the juniors as well. A lot of buying has come in that's unsophisticated, weak hands. That needs to get wrung out of the market, and the market needs to build a base so it can begin to rebound and actually, build another uptrend. So I mean that stuff has to happen. So, and the other thing is the market is a discounting mechanism. So, whatever news becomes obvious, the market will discount it steadily in advance because that's how markets work. They look to the future. They look ahead. So I'm not overly concerned with various news events. I mean, if the market bottoms and starts to grind higher, we'll probably see a bullish news event come after the fact. So that's kind of how I look at it. Focus on the market itself, the reaction, the technical structure, the price action, more so than the news events.
Okay, perfect. Thanks for your insights there, Jordan. I'm going to post a link to your website, The Daily Gold, where everyone can follow along with more of your technicals, focus mostly on the metals. Jordan, thanks for your time, buddy. Have a great rest of your week.